I absolutely love doing videos on these disruptive technology companies because I think that it's just awesome when a company can come along with a radically new idea and disrupt an old way of doing things that doesn't make sense, too slow, too expensive, whatever it is, because that company can become immensely profitable. The opportunity for us to invest in these companies that are having enormous success with these new ways of doing things, it's really, really fantastic, and it's a great opportunity to try to spot in the early stages. There's a company called Research Solutions, ticker symbol is RSSS, and I think it's one of these companies. I really think that these guys are disrupting a business that is not working very well, and I think they have a pretty radical solution for a real problem out there in the market. So I want to take a close look at this company. I want to see if they are in fact a good investment. I've got a bull and a bear case here that I've put together to try to look at both sides of the investment, and stick with the video till the end because I'll give you my final synopsis on which case I think is stronger and how I think would be a good way to play this particular investment. Let's get into it. Okay, so this company is a data aggregator. They're basically in the business of pulling together and aggregating research papers and the data from all of these old studies that various publishers have maintained in their libraries. They're building a set of tools that pull together and enable better search capabilities for this sort of data. So the company has a bit of a history. They've been around since about 2011 in the public markets. They had an IPO that really didn't go anywhere for quite a long time, but they've been on a reasonably good run since about 2018. I think the business has been gaining traction from that point. They've been making some sales, and we've been seeing a bit of an increase in the stock price, which I think is good. It reflects the fact, I think, that they're transitioning from what was their legacy business, which was a very static, transactional-based model that would allow their customers access to the tools and the research data and that kind of thing. They're moving away from that, and they're moving into a cloud-based subscription model with a much more capable suite of tools that are available in the cloud. And we've seen that growth actually realized over the last few years in the sales numbers. We've seen about 6 to 8% sales growth per year, which is really good. And they've just now reached the point where they've hit profitability. And that's kind of what's got me interested in this one. I like the model. I like the growth that they're seeing. And I think now they're at the inflection point that I look for typically in a penny stock. I try to find one that is just about at the cusp of really getting a lot of eyeballs on it, getting a lot of interest, getting that increase in sentiment that's going to drive an increase in the share price. And I kind of suspect that's where this company is right now.
What's the upside potential?
Okay, so what is in favor of this one in terms of the bull case? The first thing I really love here, and I think I mentioned it in the intro, is that these guys are solving a real problem. It's really, really difficult if you're a research-driven organization to sift through the mountains of data that has come before you in that particular field or area of research. Typically they are in the form of papers that contain data in tables. It's very text-based. It's really difficult to search. There's no consistent format. You have to go to many, many different publishers and search using a different tool at each one, basically. You have to maintain a subscription to each individual paywall that these publishers put up. So it's really costly, it is inefficient, and it's time consuming for organizations to have to deal with this. So I think the opportunity is really, really good to aggregate this, right? Because there is an opportunity to fix all of the elements of this particular way of doing things that is broken, as they say here. Filter and search is really, really primitive. These paywalls are an obstacle for any organization just in terms of the work of managing these subscriptions, assuming you can afford them in the first place. As I said too, the data formatting is not consistent, which really disables your ability to search. Overall, the problem is it makes research too slow to really get a meaningful competitive advantage. It's a roadblock that stands in the way of a lot of these small, nimble organizations that want to be quick to market. So I think any company that comes along and says, hey, we have a solution to these problems for you, then I think they're going to really get traction in the market. I think customers are going to listen, and there's going to be demand for a solution to these issues. The second point I'll make here is that this idea of an aggregator of these different sources of data and these next generation search tools in a portal sort of aggregator model, we know that this works, right? There's a lot of evidence for this. Bloomberg has been doing this for decades. LexisNexis has been doing it in the legal market. So these are highly successful approaches to data aggregation in their respective verticals. And really, it kind of stands out that we don't have the same sort of thing in the scientific research world, you know. So I think absolutely we know from those other successful models that customers need aggregation. They're willing to pay for it, and the demand is there for the successful sale of these aggregation tools. So it gives me a lot of confidence that this model is something that can be taken to other verticals, like the scientific one. I think I mentioned before that there's a bit of a turnaround happening in the business right now as these guys transition from their previous transactional model, where they just paid a per transaction fee, their customers did, for access to aggregated data, and they're moving now to a cloud-based software as a service revenue model. So, you know, that old transaction model was reliable, you know, there was a good income stream there, but it had limited growth potential because really it was targeted at the bigger players. You know, a common set of tools, though, that's delivered through the cloud is actually going to open up the small and medium business market to this sort of service offering. And there's a lot of growth there, high margin growth, that these guys can recognize in that SaaS cloud-based software model. And so this is really going to transform the revenue that is accruing to the business. We're already seeing that over the last quarter or so. The projections for the acceleration of that growth and the revenue looks really good. And I think as we see that growth get proven out over the next few quarters, that's going to drive the share price, right? So I think this is a really, really key point in time right now to potentially invest in these guys, because as investors, we have the potential now to capture and share in some of that growth that's about to happen. These guys have current revenue, right? I mean, they're only profitable now, but there is a current base of revenue from that legacy transaction business. There's growing revenue coming in. So we have both the current customers here today that are paying, you know, both on the legacy transaction business and also in the cloud business. I mean, the cloud solution is live right now. Long-term growth is ahead of these guys. You know, the SMBs are basically an untapped market here. These are folks that couldn't necessarily afford individual subscriptions to all these different paywalls, but suddenly they can afford it in a data aggregation sort of model. So there's an untapped market there that these guys are ripe to be able to hit and recognize a lot of long-term growth from it. And I think once they get into that untapped market, there's a lot of potential, as they say, for the development of new products, the cross-selling and upselling of additional features and premium search tools and things like that for additional revenue once they really get their foot in the door and establish some good customer base in that SMB research model. The last point I'll make here is I like the operating model because it lends itself to higher margins, right? These guys have very low costs. The balance sheet is reflecting that right now. It's strong. There's no debt. They have money in the bank. A lot of their operations are in Mexico or virtual, right? Because they're a cloud-based company. So their actual cost of operations is low. We see that in the financials with very low OpEx. The other thing I like is that from a technology standpoint, they're not a big data company, so they don't have big infrastructure requirements in the cloud. Really, this is not a computationally intensive solution in the cloud. It's more about features and you know, the data aggregation and the search and all that kind of thing. It's not a heavy lift in terms of the cloud. So I think their cost in terms of cloud-based infrastructure and operations is not going to be significant. So I think they can maintain this low OpEx model, and I think we're going to see it manifest itself in really good margins go forward, right? So they've got the low cost. If they can recognize the revenue growth on the cloud software subscription model, that makes for a high margin business, right? And that high margin business in a cloud software vendor means strong growth in the share price. So it makes me really, really confident that we could see strong growth in these guys.
Let's talk about risk.
Okay, so all that said, we have to build up the bear case so we're aware of all the risks that this investment faces. The first one I will bring up is that these guys are a tiny little company. They have a market cap of about 80 million, 139 employees. So do they have the capability to scale up the sales and the marketing and really execute in a cloud-based software sales model? There is a cost of sales and a cost of customer acquisition that is higher in the SMB market than it is in those large customers that they dealt with before. So this is growth that they're going to have to incur on the sales side and the cost of sales. And it's risky growth, right? Because it's a new model, it's a new technology, it's a new customer base, it's a new set of solutions, it's a brand new software, right? So all of those things inject an element of risk into the growth that these guys are going to have to try to do. And they're a tiny company, right? That amount of growth is risky for a small fish. The second risk I see is there's no real moat here. From an IT standpoint, data aggregation and search are mature technologies, right? It's not all that different or difficult, I should say, from a technology standpoint to build a solution like this. I think what little moat they do have, it's based on the relationships that they currently have with publishers, and it's based on the relationships they have with existing customers. And so that sort of gives them some trust, I guess, to expand into additional customers. That could be overcome, though, fairly easily by a larger player. So I don't really see as much moat as I would like, either on the technology or the business side, and that stands out as a bit of a risk to me. I'm a little bit concerned that somebody could come along and eat their lunch. The third point I'll make here is that, these guys have a decade of underperformance as they started up, from the time before they went through their IPO and the time immediately afterwards. Basically, the business went nowhere, essentially for 10 years. So that makes me wonder, is management capable and competent, right? Did they suddenly just figure it out 2 years ago when someone said, hey, we should put this in the cloud, right? Is that the magic formula for these guys? Maybe it is, right? And maybe they can absolutely do that, and they can transform a relatively static business into a high growth, dynamic sort of business. But if they couldn't do it for 10 years, I'm a little suspicious as to why they can suddenly do it now over the next few years. So I do kind of have my eye on management's ability to execute on this one as a bit of a risk. The next point I'll make here is that research data in particular has a problem with fake data, bad data, and fake articles, copyright infringement, and a whole host of other things that basically contributes to a garbage in, garbage out problem. Now, from a data aggregation standpoint, it's not really something that they can fix. At the end of the day, it's more of a problem with the publishers of these scientific articles. Really, they should be weeding out the garbage and the trash. But I just think if that problem gets worse, someone who is in the business of aggregating and then delivering that data, their business is at risk of being impacted by that. And so if these publishers lose confidence in the ultimate customers, right, the companies and the startups and the biotechs that want this data, if they lose confidence, then the man in the middle, the data aggregator, they could also see some erosion in their business. So I think it pays to keep an eye on this bad data problem that's really a widespread issue in academia. And finally, the last point I'll make here is a little bit related to the bad data problem. It's this feeling in academia that there should be open access to all of these publishers. This idea of open access to scientific data is pretty valid, I think, right? Because the idea is, hey, we should be sharing all of this data because it will accelerate scientific development. It'll enhance everybody's quality of life. Paywalls are basically impeding free flow of information and ideas and collaboration and all this kind of thing. I think that's correct. And I think there's a lot of people that are behind this idea of demolishing paywalls. So you can imagine if that happened, this business model would be severely damaged, if not completely destroyed. Because the thing is, if the paywalls come down, and if there truly is open access to these published articles, then we're going to see immediate competition from open source solutions, right? Like I said, the technology is really, really mature in search. There's some fantastic open source solutions and portals that probably would spring up immediately to enable really, really good access to open access scientific information. So if that happens, that could be an existential risk to this particular business. That's a big risk to keep an eye on for these guys. Okay, so if I had to wrap this one up, I would say that the bull case is really strong based on a couple of things. One, it's strong based on the cloud subscription model and the transformation that the business is going through right now. That's a big argument for the bull case. And the ability these guys have then to enable better research tools for folks that desperately need it, absolutely love that. The bear case is overall very weak, I think, except for that last point, which is the open access risk. I think that there is some momentum behind this push for open access. And like I say, if it does happen, I think it could absolutely destroy a business model like this. It could kill the company. That said, overall, I think it's a risk worth taking. You know, there's no free lunch in terms of risk reward on any investment, but I think this one is a good one. I think that the stock is at a really, really good price right now. I think making an investment at this price, keeping an eye on the overall risks, and then, you know, riding the growth wave that I think these guys are going to have, I think it is going to make for a really, really good investment. I'm actually excited to follow this company into the future. So guys, that's my story. Please throw that video a like, and don't forget to subscribe and ring the bell for the next one.